Hello there, Jake Bernstein
And Elliot Bernstein here.
with the 5-minute trading tips from twochimps.net. Today we're going to talk to you about something that a lot of people don't understand and a lot of people don't even know exists, and that is extended hours trading. A blessing and possibly a curse, depending on how you use it.
Extended hours trading can be very helpful or very harmful depending on how, when, and why you use it. Today we'd like to talk to you about some of the positives and negatives of extended hours trading and what you can do and can't do with it. The first thing you need to know is that you need to be set up to do extended hours trading in your account. This may mean filling out forms with your broker. Here's some ideas about when extended hours trading might be helpful to you.
Extended hours trading is a very simple concept. It's exactly what it says, extended hours. So when the market closes, it's really not completely closed. Trading continues. A lot of the trading that goes on is outside the awareness or the view of the public. It happens in dark pools and other transactions. But extended hours trading is public record, public information. So after the market closes, many stocks will continue to trade in the aftermarket. But there are certain regulations and limitations that you need to adhere to. So for example, let's take the case of the chart that I'm showing you here. One of my favorite trading stocks, Ambarella, and I'm showing you in particular August the 24th. So what happened? From the close of trading, August the 21st, to the open of August the 24th, there was a very big down move. Is it possible that down move may have been captured? The answer is not really, because this is a trade that occurred from the close of trading on Friday to the open on Monday. This was that great big down day that just about every stock got involved in. There are other situations, however, that are different than that. Example, earnings come out on a stock. The stock immediately comes out on the downside because earnings are negative. But this all happens after the official close of trading. So for example, the stock closes at $45 a share. The earnings come out, and the earnings are slightly negative or they're disappointing. What happens? In the aftermarket, the stock can plunge. Extended hours trading, the stock can plunge. So the stock that closed at $45 a share might suddenly be trading at $39 a share, well below what the close was at. The stock trades like crazy in the extended hours trading. You can watch it, you can see the trades, and then magically the next morning it only opens $1 lower. Could you have benefited from this? Well, a couple of points of information. Number one, as Elliot said, you need to be enabled for extended hours trading. Number two, you need to know that in extended hours trading, you can only use limit orders. You may have noticed, if you've watched the extended hours, that sometimes the trading can be really crazy. A stock can tick at $45 a share, the next trade might be at $46.50, the next trade might be at 43 and a half. Unbelievable and out of control. Why? Because trading is thin, and a lot of bids and offers are put in well above and below the market, so it's a free-for-all. How could you use it? Example. Earnings come out, the stock's at $45 a share. Big disappointment. The stock starts to trade at $42.50, $43.50. If you're convinced that that earnings report is real and the stock will go lower, you can get out of your position before the market opens the next day and save yourself a whole lot of trouble. On the other hand, let's say that you have support at $42 a share. The stock closes at 45, all of a sudden it's trading at 41.50. You're concerned that it may not come back down to your support the next day. In fact, it could rally overnight. You buy the stock in the aftermarket. Sometimes you're going to have to chase that stock. You put in an order for 41.40, and I've seen this happen to many of my orders. It will not trade at 41.40. It'll hit 41.45 and then it won't come back down to your price. So you're going to have to be nimble and keep on putting in limit orders because you can't use market orders. The next thing that happens is the stock starts to trade up. You want to get out. You try to put in a limit order to get out, they won't take your order. You have to be very careful with those kinds of orders. Extended hours trading is not for everyone, but for you, if you, for example, have very good long-term support on a monthly chart at the moving average channel low, put your order in down there in the aftermarket, and you will probably get filled, much to your surprise. Some very big moves happen overnight, but you have to be prepared for them. So let me review. Number one, make sure you know what the hell you're doing. Number two, practice. Do some hypotheticals. Number 3, make sure you're enabled for extended hours trading. Number 4, be aware of the fact that it can be very risky. A stock can trade way, way down and drop very quickly. Before you know it, that stock that you got into at $42 a share is trading at 37, and you've got to make some decisions. It's a Wild West market, so be careful. The next thing you want to remember is this. A lot of times these extended hour trading, because of the limit orders, will not get you filled. You need to be there, watch the ticks, make sure you've got a source of information so that you know what it's trading at, place your order, and you might have to chase it a few times to get filled.
As you've seen from the presentation today, extended hours trading needs to be used judiciously and sparingly. There are certain conditions, which we've outlined today, that can prove to be very beneficial to your trading. But remember the limitations that we've pointed out to you, and get your feet wet with a couple of extended hours trades before you jump in with both feet.
Thanks for joining us today. If you have topics you'd like to see us discuss, send us an email. I'm Jake at trade-futures.com.
And I'm Elliot at twochimps.net.
Thanks for being here, and be careful with those extended hours trading. Go to your brokerage firm and make sure you're enabled. And by the way, one thing I forgot, sometimes your commissions on extended hour trading might be higher than normal, so be aware of that fact too. Thanks, and good luck to you. Best of trading.